In this video, we'll be taking a look at a few different chart analyses to get you prepared for the week ahead. So we'll be talking about gold, crude oil, US30, and US100, which is the Nasdaq. So whichever of these assets interested in trading, you could use the timestamp below to navigate to your preferred charts. If you're interested in learning trade forex like a professional, check out our complete forex trading course on Udemy. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. So I have all the links to our social media platforms and our course in the description below. So starting with the gold chart, this is a 2 hours time frame on gold. Last week we anticipated a bullish breakout from the resistance level of the channel, but obviously we didn't get that. So in this week's analysis, this is still going to be the case because clearly we are still in a bullish trend, right? Because we have price creating higher lows and higher highs, and we have a very good resistance level over here. So right now within this channel, we seem to be grinding slowly to the downside. So I'm going to show you my bullish case scenario, my bearish case scenario for gold, right? So zooming in, focusing on this channel, our thesis to go long remains the same, but just at this time we are going to be adding an extra layer of resistance where we get a move like this. So you move to the upside like this, then a bullish breakout to validate our scenario to go long. So this is what I'll be watching out for to go long on gold this week. So if this happens, so I'm going to jump into a trade on gold. While for a short position, for those who would like to go bearish, you could take this trend line like this and watch out for something like this. So if you watch out for something like this and then a bearish breakout, then this could be a good opportunity to go short. But mind you, the only reason why I'm even suggesting a bearish case scenario is because we are slowly grinding to the downside following this channel, right? And if you take a look at these price levels, we have a good support level over here. So there's a good chance price slowly grinds down within the channel, aiming for the support level over here. So there's a good chance we fall off this trend line and go slowly to the downside. But you have to be extremely careful because the overall trend right now, looking at the entire chart, is bullish. So that's why we also have a bullish case scenario if price breaks out from this resistance level. So that's both my bullish case and my bearish case scenario for gold. So just to repeat once more, for a bullish case scenario, I'm simply going to wait for price to go up, touch the resistance level, consolidate the two, and give us that bullish breakout. Entry is going to be at the breakout. Excuse me. So entry is going to be at the breakout if we do get a consolidation before the breakout. Stop loss is going to be below the consolidation at least to the breakout. Take profit is going to be obviously around this resistance level. So a bearish case scenario, we're simply going to wait for price to consolidate a little more on this trend line or not. But immediately we get a breakout, you go short, aiming for these lows. So this target would obviously align with this lows over here, which will be a good support level to expect a bullish bounce on gold, right? So this I'm going to trade gold, bullish case and a bearish case scenario. But meanwhile, you have to understand that nothing is certain in the market, so you have to go in with minimum risk. Okay, so trade according to your risk tolerance depending on how much capital you have to put on these trades. So moving on, we're talking about crude oil. So crude oil, real quick, a very interesting chart. We had a very good bounce off of these lows, which is a very good support level after having a good rejection from this resistance level. So we've been watching crude oil for some time right now. Mind you, this is the 4-hour chart, and we've been waiting for a move to the upside. And last week it seems we had that move, right? So this is the 4-hour chart, and two things are going to happen, right? Either we get a reversal from current price level to the downside, or we get a move to the upside aiming for this resistance level. Either way, we are going to wait for a move to the resistance level for us to figure out what kind of trades we're going to take. Remember, trading is all about probability, right? So you can't just jump into a sell trade over here or jump to a buy trade over here. The best possible price levels to take a trade will be within this resistance level, right? And this is what we're going to do. So I'm going to wait for price to slowly creep into this resistance level, wait for a good consolidation, and then a bullish breakout. So if this happens, then I'm going to go long. So this is my bullish case scenario to go long. Stop loss is going to be underneath the resistance level, just below the consolidation list of the breakouts, and target is going to be around these highs Second target is going to be around this resistance level. So this is how I'm going to trade crude oil. So bullish case scenario for crude oil. Another option would be waiting for a breakout. So we may just hit the resistance level, consolidate a little, and then get a breakout. Then my confirmation will be waiting for a retest followed by a bullish reversal to the upside. Then my entry is going to be just after the bullish reversal from the retest. Stop loss is going to be underneath the retest. Target remains the same. So this highs and this highs. So this is another case study and that scenario to watch out for when going long on crude oil. And lastly, one last scenario I would like to talk about will be waiting for a breakout. We may likely not get a retest, but we may get some sort of a bullish continuation pattern or consolidation followed by another bullish move to the upside. So if this happens, this will also be another confirmation to go long, entering at the breakout, bullish breakout from the bullish consolidation, which would signify a bullish continuation pattern, right? Stop loss is going to be underneath the consolidation. First target is going to be here. Second target is going to be around this resistance level. So these are my bullish case scenarios for crude oil, right? For bearish case scenario, I'm simply going to wait for price to get into the resistance level, probably give us a fake out. But as far as I get a sign of a reversal, then I'm going to go short. So this is how I'm going to trade crude oil. But I'm considering more of the bullish case scenario than the bearish case scenario. But the bearish case scenario is just something to keep in mind if you are being bullish, just so you don't fall prey to the snare of the market, right? So this is my brief outlook on crude oil. So the reason why I'm not keen to focusing on either a bullish move or a bearish move based on trend is because we are clearly trading within a range right now. So you can see we have a clear resistance level over here, we have a clear support level. So as far as price trades within this range, then we are just going to treat it as a range. So there's a good chance we actually come high all the way to this price level to touch this resistance level, then move to the downside. So this is kind of like an oscillating market. So this is going to be how I approach the market. I may be wrong, so that's why it's good for you to also do your own research, carry out your own technical analysis, and if what I'm doing right now suits your trading style, suits your trading style or trading pattern, then you can go into these trades with low and minimum risk. Moving on, we're going to talk about US30. So US30, as we discussed last week, waiting for a breakout from a resistance level. We had a sweet breakout, very solid retest at the resistance level, followed by now a move to the upside. So if you zoom out a little, you'll notice, as I've said last week, US30, so which is the Dow Jones, seems to be in a massive bullish move, right? Massive bullish trend on the 4 hours time frame. Right now, all we have to do is just go long, because obviously we've had a retest. We just broke out from a continuation pattern, so there's a good chance we head higher. So going higher like this. So this would be a good opportunity to go long. So remember, I may be wrong. So if you're going to take this trade, enter at your own risk. So this is not financial advice, right? So right now, if you were to go long, let's say you wait a little for a confirmation to go long. If you go long over here, for example, stop loss should be underneath these lows, or probably underneath these lows. Yes, stop loss is a bit wide, but that's why you have to go into very low risk, right, to give your trade enough room to run. Then you can trail your position as we go higher, because this is clear skies, right? So in price discovery, so we have a bullish move. So bullish move, big consolidation over here, bullish breakout, another consolidation over here as a continuation pattern. Now another move to the upside. So it's a no-brainer, right? So on a normal market conditions, this should be a very good opportunity to go long. But nothing is normal in this market. Market could be crazy sometimes, so that's why we go in with good risk management. So just before we look at the last chart, which is the Nasdaq US100, I just want to remind you that we have a complete forex trading course on Udemy. There's a ton of information in there. There's a ton of knowledge you're going to learn. We have over 3,000 students right now. If you're interested in learning to trade forex like a professional, where I teach you with over 200 videos, use the link in the description below to sign up right now and get yourself acquainted with forex, right? So for US30, I won't be going short. I see no reason why we should be looking for a bearish case scenario, because it's clearly a bullish chart, right? So lastly, we're going to be talking about Nasdaq. So what I'll be doing here is I'm going to be comparing the Nasdaq chart a little bit with the US30 chart, because they're both indices, and these two charts are positioned differently, right? So you can see Nasdaq chart is giving us some sort of inverse head and shoulder, right? Which means there's a good chance we get a small consolidation over here and then get a breakout to the downside before probably maybe going up, right? This is what an sorry, not an inverse head and shoulder, an actual head and shoulder, right? So this is the head, this is the right shoulder, and this is the left shoulder. So technical analysis 101, and head and shoulder signifies a potential bearish reversal. So we have a neckline over here. So if this neckline was to be broken, then this would set us downward to the downside, probably consolidating a little and moving up to the upside. So I'll just be careful for those who are trading US 100, though it may look bullish like the chart or the trade is going to reverse right now. But looking at US30, this looks solid and there's a good chance we go higher. And I believe if we indeed do go higher on the US30, there's a good chance Nasdaq reverses to the upside, continues this its bullish move, because this is clearly a bullish chart, right? So take this off, take this off, take this off, then you will notice there's a good chance we go higher from here, or probably get us a fake out, creating a support level over here and then moving to the upside. So this is something to watch out for and be careful. And there's also a good chance if Nasdaq comes to the downside, US30 may likely turn out to be a fake out right now, which would equally send price to the downside, right? So this is something to pay attention to. So if you are trading US30, you have to make up your mind. Are you going long or going short? The chart says long, then you go long. For US 100, the chart says short. You really don't want to go short on US30, on Nasdaq when going long on US30, because they are somewhat correlated. But they may be uncorrelated for a particular period of time, but you don't want to take that risk, right? So that's why you pick a fight, take one trade, you go in, a little risk, see how the market reacts, then you decide how to go in on your next position. So that was it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section. And if you're interested in learning trade forex like a professional, check out our complete forex trading course on Udemy. So that's it from me, guys. See you next week.